I'm about to buy a duplex entirely from passive income.
Although, now that we're in contract, you won't believe how many things are going sideways.
Wait a second, I have to pay for what? Seriously though, I'm really excited. This is gonna bring my total door count from 9
all the way to 11.
Buying assets to produce passive income by using passive income to pay for it has to be the coolest thing ever.
I mean, now that is the infinite monetization loop.
I'm gonna talk about why I'm buying real estate right now in this seller's market, and I'm also gonna walk you through all the numbers and let you know exactly what is going on.
And then we're gonna talk about if you should be buying real estate now.
Real quick, let me make a deal with you. If you hit that like button right now, I promise to show you a cute picture of my poodle. Okay, perfect. There she is, Lucy, look at her. Let's get into it.
Subscribe.
I didn't buy any real estate in 2020. I made a couple offers, but nothing was accepted. However, by the time 2021 rolled around, I was kicking my search into high gear. I'm just an average guy who has been building up a real estate portfolio by working a regular 9-to-5 office job. I'm sharing my story with you because I'm trying to prove to you that anybody can do this. It just starts with one deal, you will get the feel for it, and then you keep on repeating. Something I like to call gold. Get ownership, lease, and duplicate. That's it. And I started with nothing, and now I'm leveraging the cash flow of my existing rental properties in order to pay for the down payment and purchase my next property. That is exactly how financial freedom through passive income is built. The market has just been so tricky lately.
It's like a real estate feeding frenzy out there.
Very low inventory, huge demand. Huge. Homes go pending before you can even follow up. However, a few weeks ago, I was chatting with my agent when in the middle of the phone call, I got an email. It was a duplex that had just come back onto the market. Apparently it was in contract, and for whatever reason, the buyer backed out and now it was back on the market.
Holy cow, you have to understand that everybody wants a duplex.
And there really aren't that many of them that come up for sale on the market. In fact, this was the only one for sale in my area at this particular point in time. Let's talk about this duplex. One side is a 2-bedroom, 1-bath, and the other side is a 2-bedroom, 2-bath. The main bedroom had an attached bathroom. That's pretty cool. And they were asking $575,000.
I had been looking for some properties, and then all of a sudden this thing came out of nowhere, and I was like, yes, please.
I asked my agent to reach out and do some digging, which, by the way, both my agent and my lender have subscribed to this channel, so yeah. That's why you know I have to get my facts right when I'm telling these stories, or these guys are gonna call me out. But let's get back to the duplex.
It's basically a 2-for-1 real estate special. Who doesn't love that?
And it turns out both units were rented to Section 8 tenants for a total combined monthly rent of $4,350.
I thought, boom, money.
So I did some quick back of the napkin math and estimated that I could cash flow this thing about $2,000 a month. Not bad at all. Well, I wasn't about to waste any time, so I sent an offer on the spot, sight unseen. So I took a risk and I tried offering a little less. I offered $550,000. Now this was a risk because if somebody else came in and offered the full $575,000, my offer would go right into the trash. Well, good news, that didn't happen, but they didn't accept my offer. However, they did counter at $575,000. And really, I just wanted to lock this in. So I accepted their offer and now we are in contract for $575,000. Okay, a couple of notable things here. This is the first time I have ever wrote an offer for some real estate without so much as a picture. I really knew almost nothing about this property. I checked it out on Google Maps, but that's about it. I know that can be a bit of a risk, but I wanted to lock this in and I needed to hustle. Just know though that if you're new to real estate investing, I do not recommend writing offers without going to look at the property first. All right, the second thing I have to point out is that $575,000 is the most I have ever paid for anything. That's over $500,000 for a pretty small duplex. I've come close to this price point a few times in previous deals, but this tops them all. I get it, it's kind of a moot point, but it's just something to be conscious of. Okay, this is where things start to get interesting. You ready?
Okay, I'm on my way right now to check out this property that I'm in contract for. I made an offer sight unseen, we're already in contract, and I'm gonna go check it out now for the first time.
Say like, yeah, because obviously there's no repairs.
I see it up there.
There's probably a couple of spots. There's a couple shingles.
I think the roof could be damaged.
Well, I had a roof inspection done, and it turns out the roof is destroyed.
Okay, so when you're in contract to buy real estate, you have a window of time to perform your due diligence. It's your chance to do any discovery that you like. So we got a professional over there and the report came back saying, yeah, this thing's dead. It needs to be totally replaced. All right, so I thought, we'll just get a second opinion. So we got another professional over there and yeah, it still needs a new roof. The best price that we've been quoted right now is about $8,000.
Well, the next thing that went sideways on me
I found out the reason the original buyer fell out of contract was because the property was appraised at only $490,000. Now remember, I'm in contract for $575,000.
Whoa, I just went into contract for the most expensive property I've ever agreed to buy.
You're telling me that a recent appraisal is $85,000 less than my current offer? You might be wondering, so what happens if you make an offer on a house and the appraisal comes back lower than your offer? Banks only want to loan money up to a certain amount of the appraised value and will not loan beyond that. Well, one of three things can happen. One, the bank will loan up to a certain amount and then I can come into the deal with cash and make up the difference. Two, the seller can come down on their price a little bit. Or three, I can just back out of the deal, which is what happened with the previous buyer. However, right now the running thought is that the appraiser who appraised this property last time was, how can I put it nicely,
Out of his mind.
Apparently he showed up to the property in a really bad mood and everyone agrees that his number is way off. Maybe he was having a bad day, or maybe whatever he had for lunch gave him the cramps. Who knows? However, I did some research on my own and the value seems to be there. Hopefully the appraiser that I pay for will be a bit more realistic. Speaking of paying for my own appraisal, it was expensive. I paid $660 for it, and right now I'm waiting for the results. What's happening is I'm taking a price hit because it's a duplex, so it's more difficult to appraise than a single family home. Not only is it basically an appraisal of two homes, but there are less comps, which make the job of getting a fair appraisal more difficult.
A comp is a comparable property that is recently sold in the area.
But guess what? The fun doesn't stop there. About now is when I got my loan estimate and discovered that there will be about $25,000 of cost just to close this deal.
Just poof, gone for paperwork.
A lot of people forget about closing costs. They plan for their down payment and their closing costs just hit them by surprise. So if you're thinking about buying some real estate, be sure to factor in closing costs. I need to say though that these particular closing costs are so high because I'm getting beat up all over the place due to the fact that this is a duplex. Which, by the way, the extra cost of buying a duplex is something that a lot of people don't talk about when they are promoting duplexes as investments. I needed to make sure that the rents were as claimed. We need proof. Not just proof, but details. How long has this been the current rent and have the tenants been paying it? Otherwise, somebody can adjust the rents right before they're about to sell the property, just to make the overall deal seem better than it is. So we asked the seller to provide an estoppel containing this information. And I'll get right to the good news, which is the rents were exactly as claimed. However, we discovered a bunch of interesting things in the estoppel.
Well, I was told that both tenants were Section 8 and that everything was good.
However, one of the tenants has some history of having trouble paying the rent. Her total rent is $2,188 per month. Section 8 pays $1,288 and the tenant pays $900 per month, meaning that $900 is what wasn't paid a few times. The seller, after putting the duplex up for sale, decided,
Yeah, it's a shame that I've been losing out on rent several times over the past year. Maybe I can keep her deposit.
So the seller decided to work out a deal with the tenant to assign her $4,000 deposit over to himself.
The weird part about it is he decided to keep the deposit after he had already listed the property for sale.
And remember, the deposit is something that would normally transfer with the sale of the home. Lovely. But wait, there's more.
Well, as it turns out, the water meter is not separate.
This is one of the main things I always try to avoid when buying a duplex. Well, that and HOA, because HOA is evil, but I digress. Having a shared water meter means I will be paying the water and sewer bills for both tenants, so I can deduct that right out of my expected monthly cash flow. I dislike this because if there's a leaky faucet, there's not a lot of incentive for the tenant to report it right away. It's as though the incentives that would motivate responsible behavior are all backwards. With so many things going wrong, am I gonna drop this deal and just walk away? Well, no. As crazy as all of this sounds, it's actually totally normal. At this point, I've bought so many deals, and there's one thing they all have in common. They all have little kinks and little hang-ups along the way. These kinds of ups and downs are inevitable. I'm reminded of a quote that I once heard. If the mountain were smooth, you couldn't climb it. I love that. What you should do if things are getting rough while trying to buy real estate is to start by remembering why you wanted to buy real estate in the first place. For example, I can remind myself what my financial goals are, and then I can ask myself if this deal still achieves those goals. Now don't get me wrong, sometimes during the discovery process, you discover something so bad that the math suddenly no longer works. And then the right thing to do is to walk away. But in this case, I'm still going to cash flow and the financials still work out. I will, however, probably have my agent write up an addendum asking the seller to meet me in the middle with some of this stuff. For example, I can ask for a $10,000 credit to be applied at the time of closing. Okay, let's talk about what all of this means for you and if you should be buying real estate in this market. Firstly, no, I can't tell you what to do with your money. But my opinions on this are, it depends. There are plenty of reasons why you should not buy a house. For example, if you've not yet saved up sufficient reserves beyond your down payment. Having enough funds is critical to being successful as a real estate investor. Or even if you're not an investor, you need to have enough funds just to make sure you don't end up with your head underwater. However, I also don't think waiting for a market crash is a reason to sit on the sidelines. I'm putting my money where my mouth is and buying real estate right now because nobody knows when the housing market will have the next correction. But worrying about what the market will do in the short term really misses the big picture. If the numbers make sense today, then there's absolutely no reason to wait. Because regardless of what the market does in the short term, in the long run you will almost certainly be better off having bought real estate.
Building up passive income with real estate is not a get-rich-quick scheme. It's going to take a lot of time, dedication, and patience.
So I say if you want to buy real estate, get to work trying to make it happen. So learn as much as you can and get started. Don't wait. The video's over. Remember to subscribe, and you guys are awesome.